It's very difficult for me to believe that Bitcoin doesn't become the standard de facto money in the next 10 years if it's come this far into the first 15. It's how government currencies typically hyperinflate, and it's also how people come to understand Bitcoin, gradually then suddenly. Fiat currencies are failing on their own weight independent of Bitcoin, such that if Bitcoin didn't exist, the fiat currencies are still failing and would still fail. When it reaches an equilibrium where it's larger than the US dollar, the trajectory to get there and all the knowledge that would have to have distributed causes people to rapidly look around the world and say, enough people have come to this conclusion that Bitcoin is money, and everyone rushes in. They don't have to read a book to understand it. It's like picking up the telephone works. I need a form of money that works, and this one does. My incentive is to adopt. I can't predict the timing of when Saudi Arabia is going to start selling oil for Bitcoin. I just know that they're going to do it and why. If 80 million people have come to the conclusion that Bitcoin is money, it becomes harder for the other 7.9 billion people to say no. Somebody needs to understand why Bitcoin stores value before they're willing to accept it directly as payment. What if there's 1,000 merchants? What if Apple says, you can sell your Bitcoin to me? The more people that are competing for exchange of your Bitcoin, the more valuable your Bitcoin is becoming.
You coined or like popularized the saying gradually then suddenly. I think on only on this podcast probably like 50 times your name or gradually then suddenly already fell. So what do you mean by that, and how did it come for you to that phrase?
Yeah, so I would say maybe I popularized it within the Bitcoin community, and in the series that I wrote, which I started in 2019, and then I turned it into a book late last year in 2023, I explained that so gradually then suddenly is an adaptation of how Ernest Hemingway described the process of going bankrupt in one of his novels, The Sun Also Rises. And in the actual novel, it's a discussion between two characters where one character asks another character, how did you go bankrupt? And the response was two ways, gradually and then suddenly. And so the way that back when I started writing about Bitcoin, the way I think about it related to Bitcoin specifically is that, or connecting those dots, is it was how Hemingway described the process of going bankrupt. It's how government currencies or fiat currencies typically hyperinflate. And it's also how people come to understand Bitcoin, gradually then suddenly. That it's generally it's accumulating knowledge over a period of time, listening to a podcast, reading a book, having Bitcoin explained to you, and it not quite making sense, but it kind of slowly getting there. And then generally that knowledge base has to be connected with some real world experience, some lived experience, where then there's something that clicks. And when it clicks, that's at least opening up the possibility in someone's individual's mind of understanding Bitcoin. And then from there, it becomes very intuitive over time. So there's kind of the gradual, then suddenly adoption of Bitcoin, both on an individual level and then also on a global level. And I think that there's a sudden moment where Bitcoin starts to click for someone. It's not at that point 100% intuitive, but from that point, it becomes that. And then also there will be a time where Bitcoin's monetization is very rapid. And so there's always the question of like, are we in the suddenly moment now? And I like to answer that question by simply saying that when we're at that suddenly moment, it will become very obvious.
So like, we are not in suddenly because we're still asking a question if we're in suddenly.
That's a great way to put it.
Interesting. This gradually and suddenly moment, you can look, in my perspective, two ways. The first way is like the fall of fiat, as you described with the debt with that man, or the rise and the adoption of Bitcoin. What would be the more accurate way, or are these so interconnected that like one goes with another?
Well, I think they are very connected. And so, another kind of idea that I would throw out there to articulate this is Jeff Bezos has a famous quote or comment where he talked I think it was on an earnings call where he's talking about how whatever he was doing that quarter was determined 3 years in the past. That if Amazon was going to be returning a certain amount of revenue or income, as he's giving guidance, there's nothing that he could do about it in the present. So when I think about fiat currencies, if you think about that being true for an individual company of how far back the decision that you make impact in the present, that what we're seeing play out in fiat currencies today is something that is at least going back a decade, if not decades, in the making. Basically, that I will point to the severance of fiat currencies from any commodity metal like gold. That was when fiat currencies detached from any modicum of reality, and so we're kind of 50 years out from the money that everybody uses day to day really not being anchored to the physical world in any way, and that Bitcoin is a return to that. And so when I think about the dichotomy or the relationship between the failures of fiat currencies and the rise of Bitcoin, fiat currencies are failing for that reason, that they are not connected to the physical world in any way, and that they can, because they became detached from any physical reality, they can be printed without cost. They can be created out of thin air. So I like to think that the fiat currencies are failing on their own weight, independent of Bitcoin, such that if Bitcoin didn't exist, the fiat currencies are still failing and would still fail completely, just as fiat currencies have. Now, somebody, Satoshi Nakamoto, recognized that it was a problem and set off to create a solution similar to, if there's a problem that exists in the world, whatever that might be, you need some solution to fix it. Bitcoin is that solution, and that as it becomes more obvious that fiat currencies are failing to store purchasing power, failing to coordinate trade, and here's this thing, Bitcoin, that's serving as a solution, more people adopt it. And the consequence is that they are related, that when a fiat currency hyperinflates, it will not be because Bitcoin exists, but people will flee to the alternative that is Bitcoin at that moment where that becomes more and more obvious in more rapid fashion, and Bitcoin monetizes more rapidly as a result of that.
Is now fiat failing faster because there is a solution to the problem? People can actually opt out?
Potentially. Yeah, I mean, I think that, I guess you could think about it as, if Bitcoin didn't exist, there wouldn't be a lifeboat. And so everybody would still be more captive to the legacy system that is failing it. So potentially maybe it would fail slower. But now that you do have this outlet, you do have this release valve, which is, I no longer have to opt into the failing form of money. It could accelerate that forward, which I think in the end will ultimately be a positive. I have this constant internal struggle, which is, the further off that Bitcoin can rapidly monetize, maybe the more people that have gotten on the lifeboat or more infrastructure, the more prepared it is. Ultimately, we're not in control of that. What I at least believe to be certain is that the fiat currencies are failing, such that if we don't have this solution, then everyone would be far worse off. And so, but if you think about an analogy of, if somebody's on heroin and they need to go through withdrawal, the longer you put that off, the worse that person's, and the lesser the chance that person has of survival. So it might be actually better that we accelerate the failure forward, only for the reason that we actually have a solution in hand to be able to offer to anybody who wants it to be a lifeboat.
Yeah, there are a lot of examples of like you don't want to have the Titanic sinking too fast, so people have the time to build out the infrastructure, the lifeboat and stuff like that, which is really interesting. I mean, when you look at the whole history of Bitcoin, it's kind of suddenly like 15 years, and we're now at the stage where we are with nation state and presidents talking about it. That's already quite interesting. I also want to highlight exponential growth a little bit. I always I got recently to know about the football stadium filling with water example, where the football stadium is filling with water. First minute 1 drop, second minute 2 drops, then 4, and so on, like exponential growth. And after 45 minutes, it's ran up to 7%. The water, and just 5 more minutes, then it hits 100%. I think it's hard to understand for people this exponential growth, this suddenly phase, how this actually looks like. How do you make it clear that how fast this suddenly goes, and how powerful this phase of all of the sudden it goes that suddenly, and what will happen in that phase, and also how do you maybe mention that in the book?
Well, I describe it. So I'll describe it on the fiat side, and then I'll describe it on the Bitcoin side, which is if you look at fiat currencies that have hyperinflated in recent past, say the Venezuelan bolivar or the Lebanese pound, the Turkish lira, hyperinflating to varying degrees. There are moments when measured against the dollar where it becomes obvious that confidence was lost. If you look at it on the chart, not from a technical analysis perspective, but just where you can see the currency actually break. And the point is that it didn't break at that moment. It broke over time and in the past. And then there was a moment when a critical mass of people all figured it out at once and ejected. And then it never recovers. It might strengthen slightly, but it's a one-way path to zero, where what it ultimately means is the currency no longer purchases anything and it can't coordinate trade. Same thing applies to Bitcoin on the reverse side, which is infrastructure is being built, the infrastructure is working, Bitcoin is credibly enforcing its fixed supply right now. That is what it needs to do to be adopted globally as money, and certainly the Bitcoin network needs to improve, more infrastructure needs to be built, but that one operation, it need do nothing different into the future in order to dictate that all the infrastructure will be built other than that one incentive, and that if that one incentive holds as it does today, then virtually the entire world will adopt Bitcoin as money. That already exists. Now we're in the process of people figuring it out one by one, picking up a book, listening to a podcast. And it doesn't have to be, like, I like to think about it as probably there's no more than 1 out of 100 people understand Bitcoin in any real way. There's no good way to measure that other than walk around town and poll your company, the people that you work with, your friend circles, your family circles, and determine what you think the general population's understanding is. Is it 1 out of 100? Is it 2 out of 100? It doesn't need to be 50 out of 100 to cause mass conversion or convergence onto Bitcoin. It probably is something between 1 out of 20 and 1 out of 10, because the people who have the greatest access to information and the greatest wealth to store will almost necessarily be on the front end of the adoption curve. And so we're still in a world where very few people we're clearly not at a point where it's become obvious to 1 out of 100 people, let alone 1 out of 20 people. You can turn on your CNBC or read the Financial Times, and you see someone that's otherwise well respected in the business world. Trump just appointed a guy who was the head of Soros's family office or investment fund, and just by him speaking about crypto, it's clear that he doesn't understand Bitcoin. So a guy that is that sophisticated. So it's very clear that we're not yet at that point. But when it becomes clear to a critical mass, when it becomes clear to 1 out of 20 people, it becomes hard to deny that reality. And then the other 19 out of 20 adopt Bitcoin, not because they're sitting there reading a book and determining whether or not Bitcoin is money. It's because they have to demand it. They have to use it because it's the only currency working. because enough people went before them and consciously evaluated and consciously determined that Bitcoin is the better form of money. And then the herd gets dragged along, essentially, is how I think about it.
So that suddenly moment is then triggered by a simple big mass of people are being intolerant about Bitcoin and being really vocal and being really informed about that, around 4, 5, 6% of the population. And that's kind of then triggering that suddenly moment.
Yeah, because I'm also thinking that, yeah, that's the way I would, that's a great way to articulate it. And that if it's, 2, 3, 4, 5% of the population, but it's 10, 20, 30% of the wealth, and in terms of naturally where the incentives dictate who has wealth to store, who has access to information, who's evaluating this, then if 10 to 20% of the wealth has figured this out, that is when it becomes more obvious to more people. Also, if you think about Bitcoin at equilibrium right now, adjusting somewhat for this latest run up, but where it was at 60,000 to where it is today, somewhere between 1 to 2 trillion, saying a midpoint of 1.5 trillion or 1.5 to 1.75 trillion. If Bitcoin adoption increased by 100 times, then Bitcoin is the largest currency in the world. So when Bitcoin starts to become rivaled to the US dollar in size, which depending on how you measure it is somewhere between 8 trillion of base money and 24, 25 trillion of broad money, that when it reaches an equilibrium where it's larger than the US dollar or comparable in size, the trajectory to get there and all the knowledge that would have to have been distributed causes people to rapidly look around the world and say enough people have come to this conclusion that Bitcoin is money and it's appreciating so fast. And then the other side of that is the fiat currency is not just appreciating against Bitcoin, but importantly against real goods and services. Everyone rushes in. They recognize it becomes easier to understand Bitcoin. They don't have to read a book to understand it. It's like picking up the telephone. The telephone works. I need a form of money that works, and this one does. My incentive is to adopt.
Absolutely, it will be a no-brainer at some point, even though if people don't understand it. Is it surprising that at that early stage, such a gigantic machinery like BlackRock is all of a sudden really positive and really for Bitcoin? Then also USA, which surprised me a lot, but I'm also not in the USA, that they are at least playing with that idea. Let's see if the bill actually passes and they are buying Bitcoin maybe. Even like big companies like Tesla have some, even though it's a very small amount of the balance sheet. Is that surprising that those really huge institutions and companies already embrace it?
Well, I'd say that it's hard to predict the timing of any of these kind of Overton window shifting events, right? If we went back to 2021 and El Salvador decides to make Bitcoin legal tender. Now, not many people in the world previously or prior to that paid attention to El Salvador. That's a country in Central America with 6 million people that prior to that point, for most people living, the thing that El Salvador had been most known for was being the murder capital of the world in San Salvador and the place that the MS-13 gang came from. A country decided to make Bitcoin legal tender. Fast forward 3 years, BlackRock does an ETF. The U.S. is talking about strategic reserve. The way that I think about that is that all of these events, while difficult to predict the timing of, are inevitable based on the fundamentals of Bitcoin. And again, its operation of being able to credibly enforce its fixed supply without the need for trust. That you can't predict the timing of the next shoe to drop. I can't predict the timing of when Saudi Arabia is going to start selling oil for Bitcoin. I just know that they're going to do it and why from a fundamental perspective. And it might not be them first. It might be Venezuela first, or it might be Qatar first, or it might be Iran first, or it might be Russia first. It's just that there's a finitely scarce form of money, and it's hard to get oil out of the ground. And every other currency in the world has counterparty risk. Bitcoin doesn't. So I think that the short answer to that question is, I think if anybody went back 15 years and said, hey, Bitcoin is supposed to be this decentralized form of money that removes the need for trust, and within the first 15 years of its development, BlackRock will have launched an ETF and the US government would be even talking about strategic reserve, you'd have to certainly say that's crazy. Like, there's no way that in that time frame it will have evolved that fast. So I think that's just the reality, but it also was inevitable at the same time, and more countries will follow, and more earth-shattering decisions as it relates to people adopting Bitcoin are inevitable. We just can't predict when or who, but we know they'll happen for fundamental reasons.
Absolutely. That seems to be that's super interesting for me. The timing also of that. It's super interesting for me also that retail is kind of sleeping now. I still didn't like. I feel like a lot of companies are coming into Bitcoin and big institutions, and obviously the Bitcoin community is making a lot of noise. But I see retail still sleeping, and there's not a lot of things going on. Even though as now I usually publish the podcast 1-2 weeks after that, so now we are still under 100k. Maybe if we are publishing that, we are already over that. So it's interesting how retail is sleeping, and we are kind of at this massive inflection point where Bitcoin is so obvious if you actually educate yourself. It's really interesting how we look at the next adoption phase. How do you think we get to those next levels of adoption where we're now at like maybe one person out of 100 actually understands it? How do we come to this 5%, 10% adoption?
Well, I think one comment I would just make is that it's difficult to, I'd say, pattern match, which is, I don't know necessarily that, if you look up prior to 2024, it was almost all retail, very little institutions. Now obviously institutions have a lot more money when it comes to individual institutions, or if we're talking about large public companies, so it can move the needle more. But I think it will, at some point somebody will go back and study the psychology of the individuals who came to understand Bitcoin versus the individuals that were late to the party. And I even hesitate to say that because everyone always feels late and we're still so early. So anybody that's listening to this is, you are in the first 1% in my view. So that is the definition of early. But there's certain billionaires that understand Bitcoin, and there's certain billionaires that don't. There's blue collar workers who understand it, and there's blue collar workers who don't. There's, quote, TradFi people who understand it, and they don't. I don't know. There when the dust settles, there's probably some mapping where you could say, if a person checked these certain boxes, they were more predisposed to be open to the idea of Bitcoin. But I don't think that anybody can articulate well what those criteria are, because the range at an individual level is like, you could take two of what I otherwise look like the same person, and one person could get it and one person couldn't. It might be the people that really value freedom or are more conscious of privacy issues. Again, it's not like if you had this IQ, or you were this type of educated, or if you grew up in this socioeconomic condition. That doesn't seem to be what's dictating who sees and who doesn't see Bitcoin. So I think that it's less retail versus institution. It's more down to, Bitcoin is difficult to see. It comes down to an individual beginning to understand it, and then that individual making a decision for themselves, or if they're a powerful person in a large corporation, that they can influence that decision. Because like we see with BlackRock is advancing a Bitcoin ETF. Vanguard is not. To massive institutions in taking different actions as it relates to Bitcoin. How we get from where we are today to that future where 5% of people hold Bitcoin, I think it's a combination of things. Part of it is simply a function of time. Knowledge distributes as a function of time. So more people reading books, more people listening to podcasts, more things playing out in the real world. Bitcoiners out there talking about how there's problems with printing money. That might be intuitive, common sense to certain people, but as people see it more and can connect it to Bitcoin, because that is what happens. Generally, someone has to have learned something, have some prior knowledge of Bitcoin, and then connect it to a real world event. So as more time passes, more people accumulate that prior knowledge, and then more real world events occur that make it make sense. The US government in 2020 to 2022 printing $5 trillion. Canadian truckers protesting and then them getting cut off their bank accounts and being censored, and people who donated to them basically having their no due process and getting kicked off their bank accounts. When Russia got essentially their assets frozen by the US government or kicked off of SWIFT. More of those events will happen. And my view of it is that if Bitcoin adoption happens as knowledge distributes in an accelerating way. So it just gets like you were describing about the kind of the exponential curve. If you imagine one person telling their 5 friends and their 5 friends telling their 5 friends, and and so on, it gets rapid very quickly. That's why I see it's very difficult for me to believe that Bitcoin doesn't become the standard de facto money in the next 10 years if it's come this far into the first 15, and if the distribution of knowledge and the development of infrastructure accelerates. So I think it's part just time. It's also part Bitcoin infrastructure becoming more and more proficient, more and more valuable. One of the things that people struggle to understand about Bitcoin is they'll often say, well, I can't use it at my grocery store. Well, people are starting to demand Bitcoin's payments. If Bitcoin adoption is still very early, then the adoption of Bitcoin from a payment perspective is even earlier. But that is happening more and more. And as a few of those dominoes fall, where people can see and say, well, oh, you can, maybe I can't accept it at my grocery store, but there are grocery stores that accept it, that the connection of Bitcoin to money as people start to see it being used more commonly as what they understand money to be day to day, that will be an unlock that helps kind of bring everything full circle. But it won't just be that. It will be more financial institutions like BlackRock adopting Bitcoin, more corporations putting it on their balance sheet, more institutions generally getting involved, more infrastructure being built to custody it. So it's not just about, oh, we need payments, but as people see money working, like even if it remains volatile at that time, will certainly help the unlock happen without people needing to do as much conscious work to read and educate themselves. But also, if you just think about the law of numbers and these accelerating patterns, think about if 1 in 1,000 people understood Bitcoin. That means that 999 of each 1,000 doesn't. 1 out of 100 might seem like a small number, but if you apply that globally to 8 billion people, well, what's 1% of 8 billion? 80 million. Like 80 million is a very large number in absolute terms, such that if that number 80 million was only 8,000, if 80 million people have come to the conclusion that Bitcoin is money, it becomes harder for the other 7.9 billion people to say no. And what that translates into your day-to-day life is if 1 out of 100 people understand Bitcoin, you know someone that you think is not crazy, that's otherwise a reasonable, common sense person that has come to this conclusion. As more people go before you, the next 1 out of 100 is definitionally easier. It's easier to see Bitcoin as money as more people have come to that conclusion before you. And we're getting to that point of critical mass where it should become easier for people to look around the world and saying, all these people can't be crazy and they can't all be collectively hallucinating if Bitcoin is storing $2 trillion worth of purchasing power.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. 100%. And yeah, 80 million is a lot because it's 10 times Austria, because I live in Austria. So I think it's a nice way to look at it. By the way, also for medium of exchange things, because you mentioned it, I'm a happy customer of Seyr, right? I use it to accept payments from a podcast for the sponsorships, and it works really great. And I think it showed me the power of accepting payments in Bitcoin, because you always get paid for the next 3 months, and you really try to more think in terms of Bitcoin. It's just the next step of not only I just get fiat and I store it in Bitcoin, but I get directly Bitcoin, directly Satoshis into my wallet, which is an amazing feeling. So I really do like that, and I had it the first time ever in this year, and I did it with Seyr, and it's really good. How important is adopting Bitcoin on this medium of exchange side of things? A lot of the narrative right now is on store of value, on how to put it on a treasury, how to put it on your savings account, and on your strategic reserve. Not a lot of talks outside of the hardcore Bitcoin crew about medium of exchange. How important is that for the adoption phase?
Well, a couple things to think about, which are, I think there's a logical order to Bitcoin adoption, which is generally somebody needs to understand why Bitcoin stores value first before they're willing to accept it directly as payment. And baked into there is really this idea that it's easier to buy $10 of Bitcoin on an exchange, or $100 of Bitcoin, or something functionally immaterial or even non-immaterial to yourself, than it is to make the decision if you run a business or you offer a service to invest in infrastructure to accept it as payment. And why would you accept Bitcoin as payment if you don't have a basis to understand why from that point forward, even if Bitcoin is volatile, to reliably store value over time? It's very logical to do the former first, and then once you've gotten to that point, and I I beat a dead horse on this for people that are listening for the first time or they're newcomers to Bitcoin, which is, in my view, the short of it, it's more complex than this, but that Bitcoin stores value reliably over time for the fundamental reason that it has a fixed supply that is incredibly is an important word, that is credibly enforced without the need for trust. And that is non-trivial, and that's Bitcoin's core innovation. If you don't have some understanding of the fact that that is the signal, or some building block to know that it's reliable or that it's credible, you don't really have a basis to know from this point forward, if I take this payment in Bitcoin and I hold it over time, that it will store and allow me to convert into a equivalent or greater amount of value into the future. If I don't have that baseline, I shouldn't be accepting Bitcoin as payment. I should be listening to a podcast. I should be reading a book and trying to grapple with that first. But then once you've come to that point, once you understand, I understand why Bitcoin stores value better than, or I understand why it stores value, and I understand why fiat loses value. And by a derivative, I understand why Bitcoin stores value better than fiat currencies. Then it just becomes very logical, if you run a business and you have that prior knowledge, to realize that accepting Bitcoin as payment is the most efficient way to get Bitcoin, because the alternative is to sell your goods and services for fiat and then convert and then incur the cost of the fiat system, incur the time delay in terms of the settlement to yourself, and then convert that into Bitcoin, which also comes with a cost. So that doesn't mean that you stop accepting fiat. It means that if you could accept Bitcoin and you have that prior knowledge that it stores value and these are the reasons why, it just becomes very logical. So the way that I see this playing out is it's less so the relative importance between store of value and medium of exchange. Is that once somebody recognizes why Bitcoin stores value, and if they run a business, it becomes the logical thing to incorporate into your business, is just say, hey, and if you want to pay me in Bitcoin, I'd like to have Bitcoin. And if you do, then please pay me in it. And maybe I create an incentive for you because I recognize that it's the better form of money. And it would be in my interest to accept it if you're willing to pay in it. And so it's not one or the other. Then the second thing is that I really view this idea of store of value versus medium of exchange and Connect for People. I wrote an article recently called Bitcoin's Exchange Theory of Value, where I talk about this in length, and we can maybe include it in the show notes, which is that medium of exchange and store of value are really one and the same. That even if I'm using a fiat currency to buy Bitcoin, and even if I'm not intending to spend my Bitcoin anytime soon, Bitcoin's valuable to me, and it's storing value between two exchanges. I might get paid today and I might store it over a period of time and spend it at different points in time. So it's not just two exchanges. It might be one large payment or one large conversion, and then in the future, a series of smaller purchases at the grocery store, paying for healthcare, whatever your day-to-day expenses are. But that the storehold of value is only relevant between an exchange on the front end and an exchange on the back end. And so that is the function of money. I deliver some value to somebody today, I get paid in money, and then I need that money to store value until the time in which I convert it into value produced by others. And so there's this natural evolution that money needs to do both. The Bitcoin only stores value because it is so easily exchangeable. And despite the fact that Bitcoin is predominantly exchanged between fiat currencies and Bitcoin today, more and more people are figuring out why Bitcoin stores value. Therefore, more and more people are demanding Bitcoin as a form of payment, just like yourself. And so the two go hand in hand. And as Bitcoin becomes more easily exchangeable, which I would say applies to things like the ETF or more companies building custody or exchange services for fiat currencies, that is more exchange. That's more opportunities for people to make it easier to buy your Bitcoin. But then also, if you are setting up a way with Zaprite, and we were honored to serve you, appreciate having you as a customer, you're making an outlet for your customers to provide liquidity in a different way, to pay you directly into Bitcoin, so that if they're holding a large amount of Bitcoin, they don't have to go convert into fiat and then take the fiat and pay you, and all of you, incur those higher costs. So the way I think about that as a microcosm is, if there's, say, I'll just use the United States. If there's approximately 10 companies that are offering Bitcoin to fiat exchange, and now there's something like 8 or 10 ETFs. Well, what if there's 1,000 merchants? What if Apple says, you can sell your Bitcoin to me? Like, I'll sell my iPhone and take your Bitcoin. The more people that are competing for exchange of your Bitcoin, the more options, the more valuable your Bitcoin is becoming. And as part of that, the easier it is to exchange Bitcoin, the more value, the better it stores value, because the more general demand there is. So I think that in the end, it's critical. It's just not something that needs to happen as a forcing function to make Bitcoin more valuable, because it will just happen organically as more people understand the underlying medium. It will happen for the reason that naturally the people that come to understand Bitcoin also run businesses, and they'll act in their self-interest to demand its payment.
Absolutely, and I even have the feeling that the Bitcoiners in itself are very entrepreneurial, and they really want to do something for the world. So probably a higher percentage of business owners than in usual populations. One thing that we almost kind of have to talk about, the big elephant in the room with the 100K. I thought last week even that we hit it, but we didn't. And now we're getting a little bit away from that. As someone that is since a little bit longer time in Bitcoin, how meaningful is that 100K? How important is that also for mainstream adoption, news coverage? How important is that US dollar milestone? Because just financially, we almost hit it. Like, we were like a few $100 away from it. So it does not make a huge financial impact at this point, but psychological as a meaning, as a symbol, how meaningful is that?
Difficult. It's a difficult one to say. I'd say that there is a psychological barrier, and when it breaks it, then it will become harder for more people to deny. That being said, I don't know if 100,000 means more than 10,000. Because a Bitcoin worth more than $10,000 when a few years before it was pennies, right? It's like it's harder to square. I think what it does in this case is, as Bitcoin advances, as Bitcoin adoption increases, that 100,000 number will make it harder for people to deny, like Apple, like Microsoft, like nation states, that as Bitcoin grows in value, as it goes from $1 trillion to $2 trillion, as it goes from $2 trillion to 10 trillion, it becomes the largest, maybe not larger than the US dollar just yet, but there's still individual companies that are larger than the entirety of what Bitcoin is storing, more than $2 trillion. It becomes harder for them to ignore, and that it requires or merits their attention. So I do think that it's important. I do think that 100K mark, like, is an unlock of, like, holy shit, Bitcoin's worth 100K. Like, this thing isn't going away. But at that same time, like you mentioned, it's, what's the difference between 99.8, and I think that naturally what is more important is Bitcoin finding an equilibrium at these higher thresholds, where when Bitcoin rises rapidly, it naturally needs to test levels that it blew through very fast for the market to see there actually is an equilibrium at these higher levels, such that if it had blown through 100K and not stayed there and then dropped right back down, the most important thing is that it sustains those levels. So I think it's actually very healthy that it kind of made several runs at it, sold off, and then the next time that it goes, maybe it does, maybe it doesn't, but it's more likely to sustain it. And that what is relevant is not that it hits that price once, is that it sustains a price above it. That's what causes the the psychological shift of these larger pools of capital, these large companies, multinational, that will start to look at Bitcoin and say, this is something that I can no longer ignore. What I'll also just say, connecting, because I thought about it when you were mentioning accepting Bitcoin as payment, is that there's a psychological barrier to, like, am I going to buy my first Bitcoin when it's 100,000? Like there's the newcomer dilemma of, am I going to be that person? And one of the things that you realize when you accept Bitcoin payments, and oftentimes people who are in Bitcoin for a long time, they recommend this, of doing a dollar cost averaging or euro cost averaging, where you just buy a small amount every day, and therefore the volatility of Bitcoin is really taken out of it. When you're accepting Bitcoin as payment, my view of it, and I've done this by experience, sell my books for Bitcoin. I was selling books for Bitcoin when it was 24,000, 25,000, 26,000, 27,000. Went to 40, it went back to 30, went to 50, went back to 40. I'm just getting a variable amount of Bitcoin, and the Bitcoin that I am getting over time is storing more and more purchasing power. But when you're accepting Bitcoin as payment, say for your podcast, for advertisers, when it's 100, it takes that psychological barrier out, where it's just like, I just got paid an amount of Bitcoin based on the exchange ratio today. It might functionally be the same thing, but when you receive Bitcoin as payment, there is something different about it, and you can't know it until you actually do it, where you're like, oh, I didn't buy it at 100K. I just got paid for my service when Bitcoin was 100K. I didn't have to make this conscious, am I buying now or then? I delivered the service, and if I deliver that service over time, I'm going to sell at different prices for Bitcoin, but I don't have to make this conscious, deliberate effort to be pricing the fiat currency to Bitcoin. I can just live my life and sell my services, and over time, the money stores value. So that's actually it's something that makes that psychological barrier less and less relevant for people that are further down the adoption curve and are at the point of accepting Bitcoin as payment.
It definitely feels different. I bought before I accepted Bitcoin. I bought Bitcoin for over 3 years on exchanges, and when you directly get paid, it feels magical. It's something like, we did it I did it with an American company on a Sunday. I sent him the payment link with Sapride on a Sunday. He made the payment, and it just was there. And it would have been such a headache doing that with the fiat rails, and then it comes from his fiat bank to my fiat bank, and then from my fiat bank to the exchange. From the exchange, I buy Bitcoin, and then from the exchange, I still have to do it in a self custody. And so it went directly from his wallet to my wallet, and not with all those institutions. It's a magical feeling, and you get addicted to that. You really want to have more things paid in Bitcoin. The only question that's then hard to answer is, how do you pay for your fiat bills if they don't accept Bitcoin? Then you have to sell it, or you have to borrow against it and stuff like that. But yeah, it feels like we are starting to build that ecosystem that we need to actually have Bitcoin as money, and not just as a store of value. That it feels really good.
Yeah, that's a great way to say it. Like, there is a magical feeling until you do that, where you've delivered some value in the world and you're getting paid for it, and it just shows up in your wallet as Bitcoin, right? And like you also mentioned, though, it's like people that are down that curve, that are accepting Bitcoin as payment, you have dollar costs, right? But you still have customers that pay you in, or not dollars. You have fiat costs, and you have customers that still pay you in fiat, right? And if you're taking that fiat and converting it to Bitcoin, you can go the other way, right? And you can do that actually at lower cost, but you do that as you need to. You're storing in the better form of money as your reserve, basically, and then you're converting into the fiat currency as you need to cover expenses. And there will be this very organic, gradual shift where you open up to one advertiser and they pay you in Bitcoin, and then the second one does, and the third one does. And as there's more people paying in Bitcoin, there's more people receiving in Bitcoin, and so you're going to have certain of your costs, like you can pay Zaprite in Bitcoin, but from time to time you might have to convert back. But that's actually a better proposition on average over time than the reverse, than storing an excess in fiat and trying to approximate the amount of Bitcoin at any point in time that you want to hold versus the fiat. So it's about eliminating that friction where you, like you said, you get paid on a Sunday. Like I was just trying to pay a vendor and I had to pay them in dollars, and they changed something about how they received it, so I couldn't ACH them. I had to pay with credit card, but they were charging a $20 fee. So I was trying to get my bank to enable ACH directly so that they didn't have to put in the authorization. I could directly. That's taken 7 days, and then I was like, screw it, I'll just pay the 3% penalty to pay with credit card because I need the service. But that there's a lot of friction there, and so being able to eliminate that friction and get paid in the better form of money, like it really, you said it probably best. There is a magical feeling to that, and if you haven't experienced it, I just recommend that people who understand Bitcoin endeavor to do that because it does feel good.
Absolutely. There's this, when you talk with a person that hasn't experienced Bitcoin payments, they say like, oh, like, why should we use Bitcoin for payments? I can just use fiat and store my wealth in Bitcoin. But once you actually did it, you ask like, why do we use fiat? It's so much more complex and such a bad system. And especially if you want to transfer money out of your own country. In your own country, especially in Austria, it works very easily. You have instant payments, like you pay from one bank to another bank. If they both are Austrian banks and Austrian bank accounts, it's like instant, they have it directly. But you go a little bit outside of the borders, even like in the European Union, it's a headache. And especially if you go to America, stuff like that, that's far away from magic. I would say anyone that does that, I think agrees on that one. It's also an interesting point that we are still at the moment where we can buy Bitcoin. We're still at the moment where we can exchange fiat for Bitcoin. There was an interesting quote someone said on the podcast recently: as long as we can still exchange fiat for Bitcoin, we are early. Do you agree with that? Is that something?
100%. Yeah, that is definitely a clear marker that we're not yet in the suddenly phase.
Okay, so
That another way to describe that is, or what I would say, oftentimes people will talk about how, why would I spend my Bitcoin if I can still spend dollars? And there's a rational side of that, and then there's an irrational side, which is if you have Bitcoin and you really value your vendor and they ask you to be paid in Bitcoin and you decide to pay in fiat, you're just externalizing a cost onto some vendor that you value rather than eliminating that cost and taking an action to help ensure that the vendor will be around. And if you really value their service, then you should want them to be around. But another way to describe that is, hey, if I go to the gas station and I pay in dollars, like there's going to be a day where a gas station figures out that the dollar is devaluing so rapidly that they can't continue to reset the price faster and faster, that I'm going to show up and they're going to say, well, you got to pay me in Bitcoin, because the fiat currency is storing value or losing value so rapidly that they can't afford to continue to do that business. And so when the dollar becomes so obviously volatile relative to goods and services, or the euro or the yen, that similarly with an exchange, it will basically be like the market will be so dislocated that will be a sign of the rapid monetization of Bitcoin. And so long as fiat currencies are relatively stable, even if they're losing purchasing power every day, it's not an absolute free fall. That's also a sign that Bitcoin is so early.
Absolutely. And I have one more small example for that. BTC was already on the show, and they are completely only Bitcoin. Like they're accepting only Bitcoin, they pay only in Bitcoin. And once you get down that road, you're like, I don't even need a KYC bank. I don't need a bank with all the regulations. I can just like have a website and a Bitcoin wallet and can do everything. Obviously, there are a lot of sacrifices in that, doing that so early, because maybe the vendor just isn't open to the idea of getting paid in Bitcoin, or you limit your customers, because maybe there's a customer that wants to pay your things, but he would only like to pay in fiat for maybe tax reasons or something like that. But yeah, it's, if you go that route, you have a whole bunch of advantages even outside of using the best money ever. You don't have to use that cumbersome fiat system anymore. Yeah, really, really good. Perfect. Then we come a little bit closer to the end of the podcast, where I ask always each and every one of my guests one question, and it's always the same question: what can we learn from you besides Bitcoin?
So one of the things that I talk about in Gradually Then Suddenly, the book, is, while it's very much focused on Bitcoin, it's also focused on describing the fiat system and really kind of the fundamentals of economics beyond Bitcoin, but the nature of money, how money coordinates trade, how money has emerged, and how it's evolved over time. So thinking not, oftentimes when people come to Bitcoin, they think about it as an investment asset, even if they hear people talk about it as money, but they really don't have a baseline to think about, well, what is money? So all the work that I do, both on my blog, writing at the blog is gradually then suddenly.xyz, as well as in the book is not just talking about Bitcoin, but in relation to some of the history of money, but also the ills of fiat money, the dollar, the euro, the yen. And then outside of that, my background is in traditional financial services, M&A, restructuring, work for a hedge fund. So a lot of the writing that I've done, that I talk about at least publicly, is focused on the credit system, of understanding the dynamics of why they always have to print money, why it's not a possibility, why it's a certainty, in those dynamics. So people can follow me for that. There's other things in my personal life that I do outside of Bitcoin, but that I might be able to teach something here and there about my hobbies, but I don't think that was where the question was directed.
Absolutely, really cool. Thank you so much for sharing that with us. Our end routine of the podcast is the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question: if you had to describe Bitcoin in one word, what would that one word be?
Beautiful.
Oh, that's beautiful. Really cool. Thank you so much, Parker, for being on the show. For those people that maybe don't know you, that saw you now the first time, where can they find you? Where can they reach out to you and ask you questions?
So if you're early on your journey person, check out my blog, graduallythensuddenly.xyz, or you can find an online version of my book for free at the Nakamoto Institute. And then if you are interested in purchasing the book, the hardcover, there's a link to it on the nakamotoinstitute.org, or you can find it at thesafehouse.com. Safe is spelled SAIF, so thesafehouse.com. If you are more well advanced and along your journey and already a hardened Bitcoiner and already understand why Bitcoin stores value, and you either run a business or you are a leader within a business that can help influence decisions, I highly encourage you to consider accepting Bitcoin as payment. If you do, consider us as Zappright. If you submit for information there or have questions, I'll follow up with you directly. We're here to help people. Zappright.com, but there's other platforms there, so we'll help you steer you in the right direction if we're not the best for you. But if we are, I'll help you personally and help you get onboarded to taking that next step towards a true Bitcoin standard.
Absolutely. And Zappright is not sponsoring me, but I'm a very happy customer, and they're enabling me to accept the sponsorship payments for that. So it's really great to have you guys on board. Thank you so much, Parker. Also, thank you so much for everyone that's watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.